Hey, welcome back, subscribers, to my world of stocks. So, with 2026 around the corner, last weekend I actually shared my top 10 dividend picks for the new year. But in today's video, we're going to shift our focus over to artificial intelligence, which is arguably the most revolutionary tech of our lifetime. Now, this will be a lot of stocks to run through. I've got 11 in total for you because we actually have one bonus stock at the end today. So, just like last week, this will be a very rapid fire style. If you do want to learn more about these stocks, I do much deeper dives in all other videos on my channel. So, feel free to subscribe or check any of those out if you'd like. But this will be a much faster type of video with just a few key points on why I feel that these companies will really dominate the AI landscape for decades into the future. And I'm really focusing here on, big market share, very strong financials, and ideally rising stock prices to go along with them for the future long term. That's really what I'm looking for in these stocks, all that potential there. Unlike last week's value plays, though, many of these stocks are already soaring because of the AI boom and what some are fearing could even be an AI bubble. So the strategy will be a little different for these in that I still consider all of them great additions to any portfolio, but they should really be purchased more aggressively on any dips in the future just to maximize your return potential. But I'll also touch on some of that as we go through each of these stocks one by one, because a few of them are actually falling already and have cheap valuations, while others are, breaking new record highs. So there's going to be a little bit of variety here, but we'll talk about it as we go through the list. Anyway, you'll see what I mean here. Let's just go ahead and jump straight into it. Now, these are in no particular order, but just really 11 of my highest conviction plays for the future of AI, very long term. So stock number one, I'm going with Google, ticker symbol GOOGL, because when we're talking about the AI revolution, I really think it's data that will become the new oil of the 21st century because of how badly it's needed to fuel the best AI models out there. And when it comes to that, well, there's really nobody that I think will have more data than Google, who already commands the most market share in smartphone operating systems, search, internet browser, email, maps, navigation, digital advertising, and much more. In other words, they know what you do, who you talk to, what you talk about, what you think about, what you shop for, where you go. They basically know everything about you. And they even have a huge cloud presence too. They're making really powerful chips, even for quantum computing, some of the best out there. They have really strong AI models. They have autonomous driving. They're integrating AI into literally everything they do, all their different apps and services and platforms. And they even have a more diversified business even beyond all of this, like for example with YouTube, where you're literally watching this video right now too. So they even know what you like to watch for entertainment and education and more. Plus, they're insanely profitable, so you don't really risk much investing in a company like this. They're still growing at incredible rates for their size, and just overall, this is probably the best all-around tech stock that you could really own as a foundational core piece in a portfolio. The only issue is that the stock has already climbed to new record highs, leaving it at a 30% premium to the sector on a PEG basis. But in my opinion, Google should have that type of premium, and it should have, in my opinion, it should have always been much higher than that. I would even give it a premium of 100% for a company like this over the competition. And while I do already own the stock myself, if I didn't, I would still buy a piece of it right now too, and then just add more to it on any future dips, because I think everyone should have this in their portfolio, again, as a core foundational stock. Stock number two, though, we're going to go with Meta, ticker symbol META, who actually shares a lot of similarities with Google in that they have tremendous amounts of data too at their disposal through their monumental social media business, which not only gives them an incredible user base of literally billions of different people using their apps every day. It's like almost half the entire world's population at this point, but it also generates some of the largest cash flows in the market. Really incredible how profitable they are, the margins they have. And it's why they're also the second largest digital advertiser in the world, only behind Google, again, because of that big social media presence that they hold. Another obvious reason, though, to bet on Meta's AI potential long term is because of the metaverse, where Meta is much further ahead than really anyone because of the tens of billions of dollars they pour into it every single year, which may seem like a waste of money to you right now, but wait another decade or so, I think you'll see a ton of people starting to wear more headsets, even glasses. I think it'll be more convenient, and they'll be able to use those things for like not only interacting with the real world environment, but they can also take virtual trips to Hawaii. They can go literally to outer space to Mars. They could go to their classroom. They can go to a boardroom virtually. They can even enter a super immersive video game, or they can go visit their massive virtual real estate properties, all of which, by the way, can be easily marketed to Meta's already gigantic user base. So there's a lot of cross synergies, I believe, there. And I'm not saying that this is a future that I like or that I'm even looking forward to myself on a personal level, but just from an investment perspective, it does seem to be a future that we are heading towards long term. And so, even if just a fraction of the real world is disrupted by the rise of the metaverse, whoever is the leader of that market, I think will not only have giant growth opportunities at their fingertips, but they'll very likely see a soaring stock price to go along with it too. Which, speaking of, although Meta usually rises very strongly long term, it did recently experience a large dip of more than 20% this past quarter, which I do think is a good opportunity to start adding shares if you haven't already, especially considering that the valuation is only slightly higher than the sector on a PEG basis, despite them being insanely larger and more dominant than almost all of their competition. Now, while stock number 3 might be a little hard to swallow considering it already holds the largest market cap in the world at over $4.5 trillion, but the valuation based on profit growth may actually surprise you a little bit. We'll talk about it, but really there's just no way I could make a list like this without including one of the most popular names in AI in NVIDIA, ticker symbol NVDA, who, according to some estimates, is projected to generate the most money that is directly tied to artificial intelligence out of any other company in the world. And that's because nothing does a better job of processing and powering AI than NVIDIA's own GPUs and AI accelerators. It's why something like it's insane amount, it's around 98% of the entire world's data centers are actually powered by NVIDIA chips. How crazy is that? Which they also power supercomputers, autonomous driving cars, robotics, tons of edge AI products, the Internet of Things, even smart cities, which is probably the most slept on advancement of AI for the future. I think a lot of people don't think about it right now. But, if we wake up a decade or two from now in the future, I think we really will be shocked at how technologically advanced cities have become. And NVIDIA happens to offer software and platforms for that and many other of these areas in AI too. So they're a big player in, again, not just the hardware, but also software as well. And yet, despite the stock soaring to literally the highest market cap in the world, NVIDIA has actually been generating so much incredible growth with amazing margins that their PEG ratio is actually still somehow cheaper than the sector by a whopping 30%. How crazy is that? That it's still that much lower than the sector. That's how incredible this company is and how they're performing. For stock number 4, though, I'm actually going to increase the risk a little bit. We're going to go with a Chinese stock in Alibaba, ticker symbol BABA, who, if it wasn't for all the risks tied to investing in Chinese stocks, this would arguably be one of the most obvious clear buys in the market because of their incredible size and strength, particularly in Asia, where they're essentially an Amazon clone, dominating both e-commerce and cloud computing, which that alone makes this a giant play on AI. Because if China really wants any shot, I would say, at winning the AI race on the global stage, well, they will absolutely need their best tech companies to succeed, including Alibaba, who I actually think is the strongest among all of them. In fact, not only does Alibaba command even more e-commerce market share than Amazon by gross merchandise value, if you can believe it, but when looking more specifically at AI, they're number 1 in cloud in all of Asia. They recently upgraded their large language model from 200 billion parameters up to now over a trillion. And they're even making new AI chips that they claim can even rival that of NVIDIA's H20 GPUs, which is also part of a broader push, by the way, that China is making to lower their dependence on American chips. Now, that alone makes this a stock that is worth considering. But on top of it all, the actual price, despite recently soaring, is still down over 50% from its highs and has been strongly suppressed over the years, only being up less than 100% all time. Now, obviously, there's good reason for that given all the rising tensions with China, but apart from the clear risks, still a very interesting AI play here I think is worth at least considering. All right, now stock number 5 will be a much safer pick. Okay, we'll go safer for this one. In fact, I actually think that if I could only buy one AI stock to hold for the rest of my life, it would probably be this one, and that is Microsoft, ticker symbol MSFT, who I think is arguably the best AI infrastructure play in the world right now, given how large and dominant their Azure cloud business is, and how it continues to grow at an even higher rate than Amazon's too. Now, the thing about Microsoft, though, is that they pretty much own the entire PC market, as well as the software productivity markets with Windows and Office, all of which combined with Azure can be heavily integrated with each other and is only being made stronger with artificial intelligence, which brings me to Copilot, a feature that I think is not only being heavily slept on, but that I also feel will be an absolute game changer for them long term. At its earliest stages right now, it's basically an AI assistant that I do think will grow into something much larger and more capable in the future. You just watch and see. But even at present time, it's already incredibly powerful and it's being integrated into everything that Microsoft offers. Having AI at your fingertips like that for virtually the entire world, anyone on a PC, is something that I just see so much potential with. And it's Microsoft's high margin subscription service revenues that I think are going to benefit the most from it and are going to continue to soar because of how attractive it makes their services and how everyone is going to need to be using them and subscribing to them long term. I pay for them myself too. Anyway, all of this helps their already massive, unbelievable profits even more. And they continue to grow at incredible rates for their size, and their performance is just outstanding quarter after quarter. So even though the stock is expensive and it continues to break new record highs, it's one that really only ever dips when the rest of the market drags it down anyway. So you might as well just have some now and then just buy more on a market-wide downturn, which is what I've actually always done myself with Microsoft, as the trajectory I believe will always be upward long term, so might as well be buying. And even now, trading at about a 30% premium to the sector is not even that bad. I mean, I think they deserve a much higher premium than that anyway. All right, if you're getting a little sick though of stocks that are already trading very high, well then stock number 6 might be a bit more interesting for you because it's one that is currently going through a very large dip, and that is Adobe, ticker symbol ADBE, who, apart from a couple recent big drops, it used to actually be a very strong performer, but it's now lost over half of its value more recently, leaving it trading close to 40% cheaper than the sector. And while there are good reasons for that, namely a rise in competition among other struggles, I still think that this is arguably the best play for the future of AI when it comes to creativity work, which you shouldn't sleep on, by the way, because as the world becomes more digital every year, so too will more digital content be created, much of which is being done using Adobe apps that they then package all together in a cloud bundle for a subscription fee that ensures recurring revenues for the company. I've even seen some recent estimates of around 80 to 90% of all digital content creators using Adobe products and services, which means if you want the best and you want to stay competitive, you're probably going to have to use Adobe at some point. And because they're now integrating all kinds of different new AI features into all these different products and platforms that they offer, I think they're only going to become even more attractive and more necessary over time too. And it's why I've been buying the dip myself. Now for stock number 7, we're going to switch it up a little bit. We're going to go with an energy play, and I'm going to choose Duke Energy for this one, ticker symbol DUK. Because when you look at AI, one of the biggest bottlenecks to all of that power is just the massive amounts of energy that it requires. Well, not only is Duke one of the largest utilities in America, but it also operates 11 nuclear reactors, which I think will be critical for powering AI without increasing emissions. And their new investments into small modular reactors should only keep them even more up to date on the latest technology in that field too. At first glance, though, the stock price may seem expensive given that it's trading near a record high, but I actually think it's been heavily suppressed for years, where it's only up around 80% in the past decade. That's leaving a valuation that is still about the same as the sector, with an attractive dividend yielding about 3.5% on 2 decades of consecutive growth. So there's actually a lot to like with this one. For stock number 8, though, I'm actually going to go with a REIT stock, a real estate investment trust. It's one that I actually featured in last week's video too, and that is American Tower, ticker symbol AMT. Because when looking at AI, another cornerstone of that is going to be the ability to connect and communicate and transfer all of that data all over the world. Without that, much of the AI that exists today would almost be useless. Well, when it comes to American Tower, they already own around 150,000 cell tower and communication properties around the world, which they're actively expanding on with new data center properties too. And with interest rates now starting to come down, I just feel that a major headwind for REITs could start slowly turning into a tailwind for them in the coming months and years. Time will tell, of course, but in the meantime, the stock still sits around 40% lower from their highs, with just about the largest dividend yield that it's ever paid at about 3.7%. Now, in my opinion, this is probably one of the best communication plays on AI at the current moment, at its current levels, and I've been a big buyer of it myself. All right, guys, for stock number 9, I'm sorry, but there's just no way I can make a video like this without also including, of course, Amazon, ticker symbol AMZN, who is literally the largest cloud provider in the entire world, which is absolutely crucial for the build out and advancement of AI. But I also just love them for their different businesses too, all of which will greatly benefit from AI integration. Take e-commerce, for example, where AI is not only being used for their various algorithms and in boosting their digital advertising sales, where Amazon already commands the third most market share in the world, continues to grow, by the way, too, at a higher rate than both Google and Meta. But it's also going to benefit them in the thousands of robots that are being deployed across their massive warehouses too. Not to mention all the AI services that they offer through AWS. There's really a lot to look through there. They're even doing a lot of work with autonomous robotaxis and just so much more that would take a long time to list. Anyway, because Amazon is just barely in the very earliest stages of expanding their profitability, the bottom line, the valuation is actually not as crazy as you might think. Amazon has always been considered a very expensive stock, and even now, it continues to break new record highs this year. But on a PEG basis, when you factor in future profit growth, they're only slightly higher than the sector, and it's a whopping 78% lower than their 5-year average on a forward PE too. That's because of the big profitability growth that they're experiencing now and are going to continue to experience. And it's going to actually be a lot bigger than I think analysts even realize too, or that they're letting on. Anyway, the stock does occasionally dip, so you'll want to keep an eye out for that, because those are going to be some of the best, greatest opportunities that you won't want to miss. But like Microsoft and a few others that we discussed today, I do still think the trajectory is always going to be upward for this one long term. So if you don't already have at least some Amazon in your portfolio, not really sure what you're waiting for. All right, guys, last stock, number 10 here. You can probably guess which one this would be that we haven't mentioned so far. It's probably the hottest name in AI right now, so of course we have to include it, but it is Palantir, ticker symbol PLTR, who I admit is extremely expensive after skyrocketing these past couple years, leaving them with a PEG ratio of around 3.2, which is about 80% higher than the sector median of 1.8. And by the way, that's the most forgiving metric of all, because it factors in future profit growth. Palantir has incredible margins. So that's why even that is at least kind of somewhat reasonable, but other metrics are sky high, way higher than that. Anyway, this is a valuation, though, that I feel may also be earned considering how incredibly strong the company is and how they continue to grow their customer counts by huge rates every quarter, even during a very challenging macro environment. And when you look at the rule of 40, by the way, for example, a common metric that is used for valuing software as a service companies, where you add up the growth rate with the profitability margin. Well, Palantir is not only above 40%, but they're north of 100% too. And for context, there is no other enterprise software company generating at least $1 billion in revenue that even crosses 80%. So Palantir is like on another level in terms of performance. And the reason why I'm so bullish on Palantir long term, reason why I'm a big investor myself, is because, like I said earlier, I believe data will be the new oil of the future. And if that's the case, I also believe Palantir may just be the best refiner of that oil at managing, analyzing, and converting all of that data into real world solutions that can be directly applied to both companies and government or military entities. Again, though, I do understand that the stock is very expensive. And because of that, I will just throw one more bonus stock at you guys in C3.ai, ticker symbol AI, a company that I sort of feel is like a little brother to Palantir. It's much smaller, it lacks GAAP profitability, it's much riskier because of it. But after losing about 90% of its value since IPO, the market cap of only around 2 billion versus 460 billion for Palantir, and a PS ratio of less than 6 versus 126 for Palantir, it just makes for a much cheaper overall bet on another data management specialist. And one, by the way, that has actually been landing some pretty lucrative partnerships with the likes of Microsoft, Amazon, and more. So it may be worth considering too. Anyway, there you have it, guys. Those are going to be some of my current picks for AI stocks long term. Let me know if you agree or disagree with any of them. And by the way, if you do disagree with any of the picks, then let me know what you would put in their place instead. I'd love to hear from you, love to get some suggestions, and maybe I can make a video on some more AI stocks in the future that you guys want me to talk about. But hey, either way, I hope you're all doing well, my friends. I appreciate your support. Thanks for stopping by. Now we'll catch you in the next one. All right, take care, everybody. Bye-bye.